If you do a Google search on Bitcoin, you can see interest appears to have waned since the peak of last year. Meanwhile, Bitcoin prices have basically traded in a tight range since February. So what does all this mean to shares of Coinbase and its rivals? Lisa Ellis is an analyst at MoffettNathanson and covers Coinbase. Lisa, great to get some time with you here today. You have a $600 price target on Coinbase. Make your case.
All right. Well, in our view, Coinbase is a very unique, one-of-a-kind asset providing the infrastructure layer for the crypto economy. So you don't have to believe in any particular application of crypto. It can be trading and investing, it can be payments, it can be NFTs, it can be cross-border transactions. If you believe in the future of the technology, which we do, Coinbase is the leading Western regulated on-ramp and off-ramp into the crypto economy. It provides that critical process of helping consumers and businesses migrate between the traditional world, our real world, and the crypto world. And as in a stock, it's a very unique, one-of-a-kind asset, getting in on the ground floor of one of the most transformational technologies over the next decade. In our view, look, it's volatile. We'll talk about that, I'm sure. But if you have a multi-year time frame, this is a extremely unique, attractive stock. And it's trading right now at literally only less than 5 times forward revenues, which is about, to put that in perspective, that's about half the valuation of a stock like Shopify, for example, another very popular growth stock. It's an extraordinarily attractive entry point into this name.
I guess, Lisa, it's Julie here. Hi. I guess the question is, how long do people have to wait, right? Because we have seen the 4-year cycles before for the likes of Bitcoin, right? So does that mean we're waiting another 4 years till crypto and therefore Coinbase comes back?
Well, predicting anything, obviously, when it comes to crypto is always a little dodgy, but the cycles in the past have suggested that after we have a peak year, the following year, of course, is going to be a bit down from that. That's what we expect currently in 2022, because 2021 was a truly banner year. Coinbase delivered over $3 billion in GAAP net income last year. It was unbelievable. So look, realistically, 2022, with the pullback in crypto assets more broadly, will probably be down a bit. But history would suggest that these cycles, bottom and turn within a year. So in our view, if you can even just hang in there for 12 months, all folks will be rolling forward and looking at 2023 and going back into the next cycle. So at this point, when Coinbase first listed last year, right into the peak of a cycle, you're saying like, oof, you probably have to be comfortable with a 2 to 3 year time horizon because we got to get through a trough. Now that we're kind of into that down period, in our view, at this point, it's like 12 to 24 months. Not too terribly long, realistically, to be waiting.
Lisa, our stat of the day highlighted just weakening search volume for Bitcoin, for Ethereum, for NFTs. What happened here? What is going on? Why is this interest waned?
Well, a lot of that is macroeconomic related, right? Coming off of the pandemic and stimulus payments, where a lot of individuals had time on their hands and money in their pocket to experiment and learn about this space. And now, that we're kind of transitioning out of that, we're naturally going through a lull period. But at the same time, that's an indicator, like the search terms is an indicator of consumer related, like retail demand, which tends to go through bigger peaks and troughs. Institutional demand, on the other hand, which is a big part of Coinbase's business, this is corporations as well as institutional investors investing in crypto assets, working through their institutional platforms, is only going up. That has been a straight line upward.
Lisa, we're very lucky to have you here today because you have an interesting coverage list. So if I'm right, you cover American Express, MasterCard, and Visa. Are you starting to worry about a potential recession, and have you made any adjustments to your numbers for those companies because of that?
Well, the immediate adjustments we have made to our estimates for all 3 of the payment networks is specifically related to the Russia-Ukraine situation, where Russia and Ukraine contributed about 5% to 6% of revenues for both Visa and MasterCard. That is gone out because they have shut down their operations in Russia, suspended them indefinitely. From a recession perspective, not yet, but we're watching it very carefully, particularly in and around Europe. It's a tricky macro situation when it comes to the effect on the networks, because you've got a lot of pluses and minuses. On one hand, some inflation is actually good for the payment networks because their pricing is based on the dollar value of goods. So actually, they are a good inflation hedge. And they're also still in recovery mode from the pandemic with travel, entertainment, restaurants, all that discretionary spending that you spend a lot on your credit cards still going up. But then we've got kind of this now nervous offset of, the situation in Russia, Ukraine potentially spreading to cause, a broader macro slowdown, which is a negative. So we love the payment networks. As you saw, they're literally our top 3 picks because of the recovery in travel. It's literally 25% of the revenues of all 3 networks pre-pandemic, and it took a nosedive over the last 2 years. That's still coming back in. But to your point, there's a little bit more of a caution clouds on the horizon, I'd say, related to the unfortunate European situation.
Super helpful insights here. Lisa Ellison over at MoffettNathanson. We'll talk to you soon.
Thank you.